What's up everybody, Brad here with the Money Dad channel. In this video I want to talk to you about a position I just closed for a pretty nice gain on this trade. The stock is IGICW. Now there was a few risky aspects to this trade that I'm going to go over. I'm going to go over why I made the trade, what I saw on the chart, what I was shooting for, how much money I made on it, things like that. But I want to start with the risks because this one was a little different. So I found this the stock chart through one of my live streams. One of the viewers in the live stream asked me to go over this stock chart for him, and I did. And when I pulled it up and analyzed it for that viewer, I noticed that there was a pattern here that I wanted to trade myself. So I entered a position on this. Now the pattern I'm talking about that I noticed on here are these gaps right here. Okay, so there are gaps on this stock chart from back in May of 2020. This one isn't really relevant anymore, but this one is right here. It's a big old gap in price. Basically, what a gap on a stock chart means is one day this stock was trading at this price all the way up here, $1.20, and the very next day it didn't trade all the way down here. It just opened the next day all the way down here at 80 cents. There was no trading in between these two prices. So that creates a gap, right? There's like this big hole in the stock chart right here. So gap theory suggests that when you see gaps on stock charts, more often than not, the stock will gravitate eventually back towards that gap. Right, so you see how this stock chart kind of curled over down, gapped down right here, created this big hole, and it took a very long time to come back. I mean, this gap happened in March of 2020, and we didn't fill it until today in April of 2021. So it almost took a year to fill this gap, and this is the daily candlestick. So each one of these candlesticks represents one day. So I noticed this gap. That was the pattern that I noticed for this viewer, and I thought it was a good opportunity to trade, to make a play on this stock coming back towards that gap. So I was fairly confident because this gap was to the upside. I prefer to trade gaps that are to the upside because the stock market in general trends up over the long term, right? Stocks, you guys see the memes, right? Stocks only go up, or stonks only go up. Well, that's kind of a joke, but it's also kind of true, right? If you're talking about the entire stock market as a whole over a very long term, yes, actually stonks only go up. That is true. Now, if you're playing one stock over the course of one day, then it's much more of a gamble. But, and we are talking about one stock here, but I do like the trend here on this stock chart. And then when you add into the fact that, yes, over the long term, stocks in general go up, it gave me a little bit more confidence that, hey, we're probably going to gravitate back towards this gap, right? So I noticed this back in February, so about 2 months ago when I was doing that live stream for that person. So we were in this range. We were in that 80-cent range. And I said, I'm going to target $1.20 because that's the top of this gap, and I think we're going to come up and fill it. And look what happened today, guys. Came up and filled it. So closed my position for that gain. Now, the risks here. There's a couple of different risks here that I want to talk about. That I just want to make everybody, clear that this was a very risky trade. Other than it being a gap theory trade, there's two things here that made it far more risky than a normal trade towards a gap. One, the stock ticker IGICW. Typically when you see a stock ticker end with the letter W, that means it's a warrant. That means it's going to expire at some point. And when it expires, you lose your money. So there was basically this was kind of like a ticking time bomb. Now, in this case, I was not worried about that because the warrant doesn't expire on this one until like 2025, like 4 years from now or something. I don't remember the exact date, but I remember it being years in the future. I was not worried about it at all. This was not a trade that I was planning on being in for 4 years. So be aware of that. But the other one is there's extremely low volume usually on this stock ticker. Now today we're sitting up at over 200,000 shares traded, which is okay. I mean, it's still not great volume for a penny stock, a $1 stock. You're basically saying $200,000 have been traded in this stock on one of its heaviest volume days in a very long time. So you can see that $200,000 traded on volume is one of its best days in a long time. That means that this thing has no volume, right? So that was the other issue, was when you get in to an asset that has very little to no volume, there's no guarantee that you can get out of that asset, right? Because there has to be volume on the other side of that trade for you to get out. Someone has to be willing to take the other side of your trade, right? If you're selling, there has to be a buyer. If you're buying, there has to be a seller. There has to be volume. So that was the other risky point to this trade. Now, luckily, this worked out for me because we reached our price target relatively quickly. It took about a month and a half, and we did it on big volume. We had a big volume day today. Got up, we're sitting at, it's 10:49 in the morning, and we're sitting at over 200,000 shares traded, when this thing typically, I don't know, probably trades 10 or 20,000 shares a day, almost nothing for a penny stock. So lots of volume today, so I was able to get out pretty easily. So those are some things to be aware of, the risks associated with this kind of trade. I wouldn't typically recommend trading low volume stocks unless you're very comfortable being in that stock for a long time, because you just might not have the volume to get out of that position when you want to. Okay, so how much money did I make? Well, we got in February, about middle of February, for about 80 cents. Like I said, I think we got in somewhere around here. I set my target for $1.20, the top of this gap. That's exactly where I wanted to target. And today, have no idea what happened with the company. There must be some good news because it popped. Made a huge move to the upside, and we're starting to settle now. Big move to the upside, big move back down to the downside, and now we're settling kind of in the middle. And wouldn't you know it, we're settling almost exactly at my price target, right at the top of that gap, $1.21. So I think I got in at 80. It might have been 88 cents. So let's pull up a calculator. I think it was like 35% on the trade or something like that. But 38 cents. What, did I really just say 38 cents? No, 88 cents. 88 cents divided by, I got out at 120, I think. So 73%. That is not how you do math, guys. I did not make 73% on this trade. I think it was the other way around. 120 divided by 88. That's probably still not even how you do good math. This says maybe 36% in that range. I still don't think that's accurate. My brain's not working this morning. Maybe someone down in the comments can fix my math for me. But I think I did make somewhere in that like 35% profit range on this one over a month and a half. Not bad. Definitely, like to see some profits coming in over the last, 2 months or so when stock market has been a little choppy. So exited this position with a nice gain. Took that cash, and I'm going to be rolling it into a new position that I will be talking about in another video soon. Hint, hint. Okay, not so much a hint. I'm just going to tell you flat out. It's going to be Facebook. But I'm going to make another video on it, guys. I will... I'll give you more details on that trade here coming up shortly, okay? Hope you all enjoyed this video. If you did, please hit that like button. If you're not a subscriber yet, hit that subscribe button. I do stock chart pattern analysis like what you saw in this video. We like to do stock chart patterns, some gap theory, some Fibonacci, stuff like that. So if you like any of that stuff, come along for the ride. Hit the subscribe button. I'll see you guys in the next video. Thanks.